Morning all. Welcome to episode 4 of my ISA portfolio. As you see in the title, I've done nothing this month. I've put no money in, brought no stocks, sold no stocks. And generally, I think that the easiest thing to do is find quality companies, because there's tons of quality companies about, and then you just got to wait for them to go on sale and buy them at a decent price. And then I think the hardest thing to do, which I heard from Terry Smith when he'd done his annual meeting for his Fundsmith, which I hold in both my ISAs, is to do nothing. So, and this month, obviously October's just been a shit show really, so it's not been the greatest month ever. You know, you got Boris on the blower every 5 minutes, a lockdown this, lockdown that, change the rules. It hasn't been great. I mean, at one point the portfolio was down to about £18,900. It just lost so much money. It lost about £1,000 in the month. So you've got lockdowns, you've got an election coming up, you've got Trump chatting, or I don't know what he was chatting, you know, crazy, isn't it? For the last 4 weeks. So it's been a bit of a crazy month. So I haven't really wanted to do anything anyway. So I wanted to keep a bit of cash in case there was any opportunities. I was looking at JD Sports and Boohoo. So Boohoo's, I thought Boohoo's price has gone down to about £2.70, but I'm looking more about £2.20, and JD went down to about £7. But I wanted to get it about £4 for a margin of safety. That's about half of what it's worth at the moment. So anywhere between £4 and £2, I'm aggressively buying JD. That's why I wanted to keep a bit of cash in the portfolio. And obviously with the lockdown, I thought JD might dip down to them levels again, but it hasn't, because obviously JD's quite strong at the moment. I mean, every time I've been in there, it's still been quite busy when it's not been on lockdown. But obviously due to the lockdown, it's had to close all its stores again, so it's just gone to online trading, which should help the likes of Boohoo and all them. Had it not been for yesterday's announcement that I can't even say the word, is it FISA, whatever. The good news is that on a vaccine hopes of, obviously the tests are going well, and it's not clear cut yet that it's all going to be sorted, but it's looking a lot more optimistic for it. And if it is successful and passes all the trials, then hopefully by spring everything, the economy won't back to normal. People won't just magically get their jobs back, but at least we can start to build the country and build people's lives back to normal. So that's good news. Makes a change. And on that good news, the my old portfolio bounced up about under £1,000. So this month's looking quite good. Obviously in the thumbnail you see it's 1,300 up. Obviously it's dipped a bit since then, since I made that, because obviously you've had people trying to take profits and stuff, and I think there will be another little dip. Like you might not lose, but it might dip a little bit, because people are going to be so excited, and the portfolios have flew up 20, 30%, 100%, 50% in the space of a day, and people are just going to want to take a bit of profits. But I think, providing there's no bad negative news coming from these vaccines, I think that the stock market might continue to grow. There might actually be a Santa rally this year for a change. Obviously with retail stocks like JD and that, they're going to struggle this year, because obviously there's lockdown, it's the Christmas period. I think online retailers are going to do much better this year, and I think obviously that's going to be a trend that's going to go forward even when we're out of the lockdown. People have just got used to buying online now, and it's just, I think it's where it was going anyway, but I think it's just enhanced that, and it's just made it, it's brought it forward. Obviously I think it's probably brought it a decade forward, where more people are going to shop online, even older people are going to shop online now. So stocks like Boohoo and stuff like that, but obviously I was supposed to do a video on Boohoo this month, but I just haven't had time, because it's just been a crap month really. Obviously I had a birthday though, it wasn't too bad, but the rest of it's been a bit rubbish. Anyway, let's start going through the portfolio. Can I just ask just to inform everyone, this isn't financial advice. Please do your own research. I'm not a financial advisor. These are just my own ideas, and obviously it's worked out all right for me so far. But I'd just like you all to just take on board that this isn't, you know, don't, if you buy a stock that I've brought and you lose money on it, you know, I'm not advising you to buy these stocks at all. I'm just showing you what I do in my portfolio. As it stands, I've invested £15,400 into these portfolios over the last 2 years. Over the last 2 years, obviously, and I've also had £3,000 government bonus, so that's 18,400. Obviously, I lost money at the start because I did not have a clue what I was doing. I was panicking every time the stocks went down, selling them. That's why I could probably have made a lot more money than what I've made. But most of this money's been made in the last, you know, since March this year. So, and now we're at 21,131. So that's looking like £2,500 capital gain, and 1,358, 1,200, 300 to be this month, and 1,000 in like the space of an hour yesterday on the news of the vaccine hopes. But obviously, I just think now you got more chance of all these stocks getting back to their pre-COVID levels now. So, you know, stuff like that I've got in my portfolio could double, which I'll go through that with you in a minute. Let's just get stuck in then. Just first of all, stocks and shares. Sorry. There we go. First of all, stocks and shares. Obviously, Distill's done all right this month. It's gone up another £100 from where it was last month, and obviously I'll explain to you that this is a small cap company, and I'm holding 100,000 units. I'm hoping one day, you know, in the next 5 years, it's going to be £1 a share. So that's going to be a massive. Well, it's 100 bagger for me, really. That's going to hopefully be a massive. It's ramped up. It's doing like cans now with other brands, and it's selling them in Asda, Tesco's, all them big places. So hopefully, you know, people drinking at home now more Christmas time. It's going to be like it's going to come on a lot. I think the brands that it's got, Red Leg and that, they're going to do really well and they're going to be popular. So it's ramped up its marketing now as well. So that's really good for it. We've got the Fundsmith equity. Obviously I've spoke about this loads. This year's it just buys companies, quality companies at a reasonable price, and holds them for as long, well, forever hopefully, but for as long as the story doesn't change. It tries not to do anything, which obviously he said that in his meetings, and that's what I've tried to do this month. He's made 2 purchases this month for Nike and Starbucks, 2 quality companies. So I wear Nike clothes. A lot of people wear Nike clothes, and who doesn't love Starbucks? It's just them sort of companies. Nothing fancy, no biotech or banks, or, you know, just simple everyday stuff, that brands mainly that people like to use, and obviously the people that I use again and again and again. Greggs, obviously I've spoke about this loads. I've done 2 videos on it. It's finally coming through to fruition. Obviously I said about the second lockdown, it's happened. That was a threat to Greggs, but obviously in more videos I said how I don't think Greggs will close its stores because it's all right now. And then obviously I spoke about Just Eat a lot, and I have noticed people that I always speak to, I've just suddenly realised you can get Greggs on Just Eat, you know, and they do buy it on Just Eat now. So I don't, and obviously you can just, not many people go and sit in Greggs, do they? It's not like you're missing out on, like, you know, a lovely meal. You're not going to take a date to Greggs, are you? You want to sit in Greggs and have a sausage roll, you're not, are you? So people just go in and grab what they want and leave, really, anyway. It's not really going to stop people going in. Obviously, and they've got a lot more, and they've got places where you can drive up to, park. Yeah, obviously the city centre ones are still hit hard, but it's not the whole estate. And I think obviously the lockdown might help because there's less places that are open. So, you know, Greggs is an option, McDonald's, you know, and people are going to use these places. It's not like the first lockdown where absolutely everything was closed except for your grocery stores. And, you know, that was it really, wasn't it? You know, if you wanted to, you couldn't get toilet roll because there was none on the shelf then. But it's nothing, I don't think this is anything like the first lockdown. From what I've seen on the roads and that, it's just one of them, isn't it? Basically just don't have a party and you're alright, but you can still go to whatever you really want to. The pubs are closed and that's about it really. Pubs and restaurants, but you can still take out at a lot of restaurants now as well, so yeah, there you go. Greggs it's starting to come now. It's a $15.93 a share, and I remember I said in one of the videos I've brought in at 13, so that's good. If I go 1 year, 1 month chart, I normally use 1 month chart. See, started at 14, dipped, well, the month was rubbish, and then looking, the last day yesterday, and then news hopes of it all going back to normal. Greggs shot up, and yeah. One day, look, great. Obviously, it went up and then it's gone up and then it's gone down. I think people are just taking profits there. So that's the stocks. Lindsay Train, obviously, that's just stayed the same. It's not really done much. Yeah. So then we'll look in the main portfolio. So now it's lifetime. So as I've said, I've brought nothing this month. I've sold nothing, and I've put no money into it. Obviously, I've got my biggest holding here is in Greggs, and obviously that's really paid off. Like I said, I wanted to go more aggressively into a stock when I thought it was a quality company at a really bargain price, and I thought Greggs was that company, and I didn't want to just do what I did in my first round investing in March with JDs and BEs and just put £1,000 in. I wanted to put as much money in as I felt comfortable with in one stock. Because, you know, you double £1,000, you got £1,000. You double £3,000, you got £6,000. You double £1,000, you got £2,000. You double £3,000, you got £6,000. So that's why I wanted to put more money into Greggs, and it's sort of paid off, to be fair. And I think the furlough scheme being extended, because they were having to make some hard decisions. But you know what? The thing, also the thing I like about Greggs is they put their employees first. They don't just say oh, we're there for the employees and that. They actually put them first, and they treat their employees quite well. So I think they probably re-furloughed a lot of their employees and stuff like that. Obviously, head office jobs and stuff like that, they might have got rid of a few jobs that, you know, they were duplicated or whatever and pay people off. But even down to the shop staff, they treat them well. They don't just, you know, piss them about, like. But there you go. The next one is Legal and General, and I've built a position in this over time. Really, it's built up. I just add it into it every so often when it dips. So I haven't added to it this time when it dips because I'm quite happy with the size of the position. I don't really want to be wasting the cash that I've got in there, considering I haven't put any money in, so I can't build up my cash position in the portfolio. And obviously, I've filled my lifetime mark, so I can't really get no more cash in there this financial year till after March, like, because obviously it's full, so I can't get no more cash in there at the moment unless I sell something. So I don't want to just be whacking more money in Legal and General, and I'm happy with my holding, and it's giving me 9% a year, and so that's sort of about £300 a year in a dividend payment, which will be automatically reinvested into that stock anyway. So I don't really need to be adding to that. I'm just going to leave that and let that build over time now, and then obviously every year I'll be getting more dividends coming from it because it will be reinvested, and then that'll have dividends on top of the reinvested dividends. So it's just that'll compound itself, you know, at such a high, providing it keeps its dividend payments, which I think it will. At least maintain the level it's at. I don't know if it'll increase it at the moment, but over time it will increase it, and you know, that could be quite a lucrative holding there. Hargreaves Lansdown, I spoke about this before. It's not really done much this month. It's one of them ones. People just, you know, it was absolutely diabolic at one point. I think I lost £600 on it this month. But you know what? Don't panic. I didn't like it every day because it's just horrific to look at some days, especially when you got that big blonde oaf on the line. you know, should go out, shouldn't go out, all that rubbish. So you just knocks your stocks for six sometimes, but you can't just sell stocks on headlines or news or panic or fear, you know. Yeah, there is a disease and there is a lockdown and stuff, but you know, the world hasn't ended, has it, in like the 8 months, you know. It's not a zombie apocalypse. We ain't got a lot of people walking around the street like trying to eat people and stuff. So I think, you know, gotta put into perspective, you know, 10 years time, yeah, everything's gonna look, you know, it's not gonna change the economic outlook in, you know, 10, 20 years time, you know, we're still gonna be moving forward as a country and as a world. So in the short term, it might be volatile as, you know, hell, but in the long term, it's a wane. It's gonna show its true value, and I think Hargreaves Lansdown will do that. I think Hargreaves Lansdown probably, you know, when it gets its next year, when it gets its final results, it's gonna probably make a lot of money because people are just gonna be trading. You know, lockdowns coming, everyone sells their stocks, sells all their funds, sells everything, just sits in cash. Vaccines here, everyone just buys every stock going. Can't get enough of it, you know. So well, that's my view on that one. Obviously spoke about Fundsmith equity. I've got a bigger holding here, and that's done really well for me. I've only been dollar cost averaging into that. I haven't this month because I just want to hold my cash position. I probably won't buy anything till after Christmas now, if I can be disciplined enough to do that, and then that's good. Legal and General. This is like my Legal and General Gilt. It's like government bonds, and obviously it sort of balances my portfolio out a bit. A dollar cost average into this as well, but it's not obviously when my stocks shoot up. So if I make £100 on the stock because of good news, I normally lose about 10 quid on this. So and vice versa. But when I lose £100 on stock, I'll only make £10 on it. But what it does for me is I know it's there, and I know I'm back of it, and then I feel like, you know, if I want more cash in my portfolio, and because stocks are dropping and because there's buying opportunity, I'm going to sell that holding and bulk up my cash position and use it to buy these stocks on a cheaper position without feeling, you know, I wouldn't want to put 3 grand into stock now and have no cash in my portfolio, and I wouldn't want to put 2 grand in the stock now and have £1,000 in my portfolio because I wouldn't feel comfortable with that cash position. That's just me. I like to have about, you know, a certain amount. I don't feel comfortable with cash position. I'd like more cash in there so I can, you know, start like hunting for cheap stocks and stuff like that. There won't be that many. There still are cheap stocks. I mean, that and no, like Greggs and stuff like that haven't, you know, and Hargreaves Lansdown, they were in the £20 a share bracket, and Legal and General was at £3 a share. Legal and General's only at 2.21. Hargreaves Lansdown's only at 15, and obviously that's only at nearly just under 16. So it's there are still buying opportunities, but I'd prefer a bigger cash position. That's like what does when there's a panic in the market, a sell-off, I'll sell that. If that goes up in value, I'll have more cash to deploy. So I'll take the profits from the bonds and buy cheap stocks and hopefully make a profit for them over the long term. Spoke about this still. I've got another 100,000 units here. So you just think, oh, maybe that one day, you know, I don't know whether it's going to be a year, 2 years, 3 years, 10 years. It's going to have some news. It's either going to sell its products or sell some of its products. So we're going to sell a whole business to a bigger business like Diageo, I don't know, a bigger drinks company. Or it's just going to make more money. It's going to be a more popular brand. It's going to make more money. But at some point, whether it's 1 year, 2 years, I mean, on news like where it's sold its business, or it's sold its to another company and made this much, it will just fly up in a day, like all the stocks did yesterday on the vaccine news. And then at that point, I'm aiming that it's going to be about £1 a share. You know, it could be better than that. But with 100,000 units or shares, 200,000 over the two portfolios, that's £200,000. And then all of a sudden, you know, you're not looking at a portfolio of £20,000 anymore. You're looking at a portfolio of, like, you know, £250,000. So that's the sort of things, you know, it is a risk. You could lose money on it. I could lose a whole grand on it. Could go bust. But I've done my research. I'm happy with the stock. I think it's okay going forward, and it has done well even in lockdown periods. And it's a slow burner. It's not something that's just come out of the woodworks. It's just flying. It's not a boo. It's not a fever tree. it's one of them. But now it's starting to, you know, it is starting to move in the right direction, and hopefully at a pace now. But you know, it could be 2 years, could be 3 years, could be 5 years, could be 10 years before I see any return on my like major return on my investment there. But we'll see, and I'll keep you updated every month. Well, but that's basically my whole portfolio for the month. And I've had, you know, it's been a shit month, but it was a good day yesterday. And you have your good days and you have your bad days. And yesterday was a good day. Let's hopefully we can carry on moving forward with that. And hopefully I can say, like, Greggs next month, or lockdown's been curbed, vaccines here. You know, it's optimistic, but, you know, Greggs' £7,000 holding doubled it in the space of 3 months. It's all optimistic. Could be the other way around. I've lost £2,000. You know, you just don't know, do you? But this month's been rubbish. But yesterday was good, and you know, right on the cusp of doing the video, it's just shot up. So I was lucky on yesterday. Well, we're all lucky. They're hopefully getting a vaccine. So, and hopefully the world can get back to normal at some point in 2021. Fingers crossed. I hope you enjoyed the video. It's been a bit different, this one. I've just chatted, you know, a lot of waffle more. Well, it depends what you think on that one, but obviously I ain't spoke too much about the elections. But the one thing I will say about the elections is I was happy with my portfolio before an election, a US election, so I'm going to be happy with it regardless of who wins the election. I don't really care for the politics of it. You can make money no matter who's in office. The only thing I'll worry about when people, you know, are in power is World War III going to start because they've, you know, tweeted some stupid shit, or, you know, because they've got an ego the size of a, you know, he's into that. But can I just say that you all like, comment, or could you just like the video, because it just shows that, you know, it's worth my while doing these videos. Also, if you're new to the channel, could you subscribe to the channel and hit the notification bell to see future videos like this if you enjoy stuff like this. I mean, as the portfolio grows over time, you're going to be seeing, you know, it start from, you know, well, I didn't show you from the start, but it was about 16,000 a few months ago, wasn't it? 19,000, and I'll just, over time, you'll see it grow. I'm only doing one video a month at the moment, because obviously I haven't got, you know, I haven't got thousands of subscribers to be saying that I'll do a video every week for you. But I'll try to be doing an analysis for video on each stock on, you know, my watch list this month. And going forward, I'll try and do one video a week, hopefully time depending. But October was just an awful month, really, for my time and stuff like that. I had so much to do, I couldn't, and, you know, I didn't want, you know, I had a lot of things to do, a lot of things to sort out, and I just wanted to sort them out. But obviously, it's not done too bad, because, you know, I've just left my portfolio alone, not mess with it, and I've had a decent month in the end with it. So I hope you like the video. Please like it. As I said, subscribe, hit the notification bell for future videos. Hope you all have a good day. See you next month.